The US dollar continues to gain value in the foreign exchange market amid the Fed's hawkish rhetoric. Representatives of the US Central Bank confirms that inflation is cooling but are poised to keep raising interest rates until inflation stays firm at the level of 2% per annum. Taking into account such rhetoric from the regulator, the foreign exchange market will most likely see a long-term rise in the dollar. Against this background, it can be assumed that oil will hit towards $80 per barrel, and this movement may well take several days. According to the trading chart, the situation is completely different. This week, Brent crude oil futures have already gained over 7%. As a result, the asset clawed back most of the early losses incurred during its recent correction. However, the volume of long positions decreased in the 85 and 85.50 area, which acted as a resistance. The benchmark is expected to resume its bull run if the quote overcomes the $86.50 mark. Until then, the current downward pullback may continue, which in turn will lead to a shift in the market sentiment. Gold was wound down by a stronger dollar when compared to other financial instruments. The yellow metal posted the heaviest losses. This is due to its safe haven status. To some extent, the greenback is also a safe haven asset when viewed through the prism of a US government debt. A sharp drop in the gold prices indicates the flow of capital into the debt market as investors are waiting for the growth in bond yields. Given these reassessed expectations, the most likely scenario suggests a gradual slide in gold prices to the level of $1,800 per ounce. If the price fixes below the 1,860 mark, the asset will extend weakness. The ruble proved to be more resilient to the dollar's pressure. The US currency has only moved to the upper boundary of the range, limited by the levels of 72 and 73 rubles. The dollar-ruble pair slowed down the pace of its upward cycle around the control level of 73, which led to a sideways move. To extend gains, the dollar needs to consolidate above this level on the daily chart, otherwise range-bound trading may drag on. This in turn may result in a downward pullback and accordingly a rise in the Russian currency. Today, the ruble has every chance of recovering by at least moving to the lower boundary of the range. The driving force behind its rally will be outcome of the Bank of Russia Board of Directors policy meeting, provided that the regulator keeps the key interest rate unchanged. Considering its previous cuts, this looks like a step toward monetary policy tightening, and this move will contribute to a stronger ruble. However, many analysts believe the central bank will try to stabilize the ruble by raising the rate at today's meeting. Notably, the Ministry of Finance has recently announced its intention to increase its June sales in order to weaken the ruble to 75 rubles per dollar and ensure the competitiveness of exporters. However, in the face of sanctions, the Ministry of Finance and the central bank, with its rate hikes, may thus deprive consumers and businesses not only of the illusion of stability, but also of cheap loans, hindering growth in entrepreneurship and limiting domestic consumption in the country. And that's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.